And when I go look at that Monero chart, it looked like that thing's a store of value, in my opinion. So
Yeah, long term, it's been around for a while. It's been around. It's kind of like a stable coin right now.
right.
It
Yes.
doesn't fluctuate as much. I think part of that has to do with the fact, once again, that it's actually used. It's
Yep.
not just speculated on, but people actually use it. So they need to go and they want to go buy something on the dark market. They need to go get it, and then they're going to hold it and they're going to send it. They're not just going to like throw it down, sell it as soon as
Yep.
something happens, because they actually have a need for it. The other reason is too, it's not on as many exchanges because
it's been delisted.
It's been delisted. I live here in New York. Monero has never been listed on a centralized exchange that operates in New York.
Wow.
It's never been listed, let alone delisted.
So that's the people's coin then.
It's 100%, man. 100%.
Yeah, you know what? So David, our other co-host that you met today, he's been mining for a few months, and then I actually started another mine, recently as well. I want to participate in the network, and it definitely seems so much easier to mine with Monero than it was when I looked into Bitcoin. Ethereum was a no-go. Cosmos's validators and all the rest of the platforms was not easy for me to just, on my laptop. So it was very impressive.
Monero, like I said, it's constantly evolving towards being true digital cash, and one of the aspects of that is to align with Satoshi's vision of trying to align as closely as possible, of being one CPU, one vote for the mining network, right? So where anybody can mine anywhere with access to the internet and access to a CPU. Right.
So
right.
Smartphone, whatever it is, you can essentially fairly compete with the CPU. It's ASIC resistant. There are no ASICs on Monero. There's been ASICs it's always been ASIC resistant, but there's been attempts to make ASICs, and there's been some achievements that have happened in the past, and the Monero community has had to pivot and constantly change to boot the ASICs. But over the last, I guess it's been almost 4 years, there was, we've essentially achieved making Monero only mineable by CPU in terms of competing, right? It doesn't make sense to try to make an ASIC at this point because of its proof of work, which is based on something called RandomX, invented by Howard Chu with Tevador in the Monero community, and it was a breakthrough, and it basically turned the CPU into the ASIC of Monero. And so the way it's designed, it doesn't really make sense to try to design a better piece of hardware, because it functions in such a way that the CPU is the most competitive piece of hardware that can be used for Monero, which is great. And it's very important. I know, like, we've been talking about fungibility, we've been talking about privacy, but the third prong, and just as important to the others, is Monero is built to be unstoppable. And this is, I think, another difference between Bitcoin and Monero. It's not just that it's the private version of Bitcoin, it's the more unstoppable version. And part of that is because it's private, right? Because Bitcoin's ledger doesn't just give companies and governments the ability to surveil transactions, but it gives governments and corporations the ability to essentially co-opt the project. Right? Because if they can see all these transactions, they can start to influence the network. They could start to influence the miners and the mining network, because the mining network is all ASIC miners, and there's only so many companies that are now mining. It's become kind of centralized in that degree. Like you can't compete as an individual, and it tends towards these large companies that have access to cheap electricity and have access to the ASICs and have access to the regulators, which they inevitably are, like any other big industry, like pharma, and like RFK will totally get this once it's explained to him, because he's always kind of in tune with these concepts of how regulatory capture, right? And we're going to see it with Bitcoin. We're going to see, these large mining companies working in cahoots with governments to do whatever the government wants them to do. The government be like, hey, we need to make sure that you only use this type of power, right? Because we want you burning whatever clean energy for your mining, or we need to make sure that everything that's mined, all the transactions that go through Bitcoin are compliant. right? That they're following the Bank Secrecy Act and that they're compliant. In fact, we need to work KYC into mining itself. People may be like, "Oh, that's never going to happen." Well, the way the Bitcoin network is architected, it's open.
Awesome.
It's open to being co-opted in that way because
it's called Riot Blockchain and Riot, a whole bunch of them. They're all in the stock market.
Yes, we've seen compliant miners.
Yep.
We've seen it done in the past.
5 giant ones.
Yeah. Where they were only mining what they called compliant blocks.
Yeah. And then they're pushing in Montana right now to be a big hub. Up north we're a little bit colder. It's happening.
Yes.
All government backed.
Yeah, I don't know if you're familiar with OFAC or the Financial Action Task Force.
Yep.
These large regulators that have these rules that somehow get adopted throughout the entire world. They come up with a rule and it gets adopted. Now, the Bitcoin miners that are these companies that are publicly traded companies that at the end of the day, they don't care about liberty. They care about their company, right? And they care about their stockholders and they care about making a profit. And I'm not saying there's anything wrong with that, but that trends towards a scenario where you have them essentially working in cahoots with regulators to do what they need to do to keep the doors open. And in fact, not only does it keep the doors open, but it allows it so other miners can't compete. They're like, sure, yeah, we'll do what you want.
I was trying to compete last year and I was shut down,
Right. So Monero is, I believe, very different than Bitcoin in that way. So it's lack of transparency and its decentralized mining network makes it less co-optable by corporations and governments.
You just watched a clip from episode 68 of The Next Block. If you enjoyed that clip, hit that like button, hit the subscribe button, share it with a friend, and let us know down in the comments below what your favorite part was and what you think of Monero and privacy cryptocurrencies. If you enjoyed the clip and want to catch the entire interview, check out the video description down below for a link to the entire episode. To support the podcast even further, check out the video description down below for a link to our Algorand donation wallet. This wallet accepts most Algorand standard assets and is a great way to support the podcast. The next handful of weeks on our live show have a bunch of great guests, including Tony Edward from Thinking Crypto, Stacey Warden, the CEO of the Algorand Foundation, Anthony Scaramucci of Skybridge Capital, and so many more guests. So be sure to subscribe, ping that notification bell, and we will catch you in the next episode. Thanks.